Hi everyone, David Paul speaking. I'm starting off this evening with a chart of the JSE. It's a composite index of the JSE that my software calculates. The blue line is the JSE. It's all 366 shares that we follow. Uh, it shows the bull market in the JSE. The red line below it's a simple 200-day moving average, and this clearly shows this bull market that we've been in. And the last strong run up started December 2010. Market making rising bottoms up the page and a very, very strong trend. However, the green line explains why I've been sitting in probably more cash than I'm comfortable with, because the green line is our best shot at the valuation of the overall market. And I don't think this comes as any surprise, but our valuation of the overall market is saying that the overall market looks pretty stretched at the moment. So I'm sitting in probably more cash than I would like, and that's the reason behind it. Little nervous that this market is overstretched. Sooner or later, these two lines are going to come together. Nevertheless, I am holding some shares, so let's have a look at them. So I'm going to go and have a look at the first share that I'm looking at. I bought into this the other day. It's Capitec. And Capitec spent 2 or 3 years in this consolidation. It would seem to have broken this consolidation. This is a 5-year chart. Seemed to have broken this consolidation after this textbook flag pattern, and the fundamentals look good. Certainly the fundamentals are marked very good on Vector Vest. And as a technician who spent the last quarter of a century looking at chart patterns, this is a textbook 5-wave flag, and it's broken up the page like clockwork. Had a very good day yesterday. It'll take a while to get through these old tops, but I think that looks really great. If we blow it up a little bit to the last year, we can see the market came back to that old top just there, and has now moved up the page very nicely. So I think that's going to be a good winner for us. Okay, so the next share that I'm looking at is Omnia. Now, Omnia has been one of my favorite shares for one hell of a long time. Moving up the page and has moved up. Very good day yesterday. We took a dividend off it the other day, and looks to me as if it can get at about 250 odd relatively soon. Let's see what it can do today when the end of day results come in. So I'm holding Omnia. PSG, well, I know I told you I should have taken profits into the 110 level. I didn't. I watched it come down again in this textbook flag, moving up the page quite nicely. I think it's going to push north of 110 with a decent win behind it. And I told everybody that would listen to me that we should have been buying into the share somewhere down around there. So if you didn't get this bit, I'm long the share since in here. If you didn't get this bit, then I think that there's still more in it. Okay. Now Westcall, I'm still sitting. It's done nothing. It's a waiting game. I see Steve Menkes at Amara Reid has put it on his book as a speculative buy. I think he's right. I like the share, and I think the share is going to be worth 4 or 5 rand. I'm not worried in the slightest about it. Where I've got some trouble, as you know, is Invicta. Invicta has had a strike, and it's come right back to the 618 level at about 105. I talked about this the other day. I thought that level was going to hold. It didn't hold. If we blow it up a little bit more, we can see the level. Bounced off the 50, came right down the page, and came down the page fairly strongly. Today it closed at 108, so we've seen some Fibonacci players stepping in and buying at relatively cheap. So somewhere down around here, this level has got to hold, folks. Okay, now something new. I've got a very interesting situation in MTN. MTN has come back and has come right back to those old highs. The MACD is showing strong reverse divergent. Looks to me as if MTN is just about to stretch its legs. So MTN is a share that I think you should be looking at over the next couple of days. Bear in mind, ladies and gentlemen, that we've got a market that's significantly overstretched, and we have a Dow Jones that's rising. I still think there's probably another 500 points in the Dow Jones yet, but sooner or later we're going to have a pullback. And as I started with the JSE by my measure and by pretty much everybody else's measure that I read is looking on the stretch side. So just be careful. Thanks very much. This is David Paul.